This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Gotta say, it's like, oh man, it's kind of like not People Magazine or Entertainment Tonight for Wall Street, but when these two walk in, it's just like...
You know what it is? It's like Bloomberg News and the way we cover banks. That's what it's like.
Yes, it is indeed. We tease this at the top. Two iconic Wall Street firms on our most read list on the Bloomberg. One is exploring some sales. The other also exploring some executive shuffles.
Wait, is it the other one that's exploring an executive shuffle? Or is there, the one that's exploring a sale? There could be an executive shuffle. What's going on?
Make the connection,
yeah.
Right? Okay, so we have two people to make that connection with our Wall Street Roundup. Bloomberg News senior finance reporter Sri Natarajan and Bloomberg News Wall Street reporter Sonali, Basak, both in our Bloomberg Interactive Broker studio. One is about Goldman, one is about Citi, one is about some sales, one is about executive shuffles. So I do feel like we could kind of mix and match them all together. First of all, what's going on with Wall Street? I mean, too many cocktails out in the Hamptons, or is summer over and we got to do some things? Like, what is it?
Well, summer is over. It's important time for summer to be over because we've not had a lot of business on Wall Street for the last few months, and they're really hoping that when everyone returns post-Labor Day, the capital market spigot absolutely opens up deals and IPOs and whatnot because they really need it because they've not had a great 18 months.
Maybe an ARM IPO? Maybe.
Would that do it?
We're close enough to it. It'll be one of the biggest tech IPOs in like forever. So that would be a big signal for the market. And after that, you have a few other interesting names like Instacart and a few others that will come through because if those land properly, that's a really big sign for the bankers and they will all breathe a big sigh of relief.
All right, Sonali, come on in.
There's a few things, yes. To the point that Sri is making, you are seeing deals finally starting to come back. And something interesting is happening both on the deals front as well as on the underwriting front. So you're seeing these massive private credit deals coming through the pipeline, the largest ever when you think about Finastra. But at the same time, you are also having the banks unload all this hung debt. What does that mean? It clears them up to start to raise money and start to underwrite towards new deals. So both on the debt side and on the equity side, you are seeing business open up. Okay, let's go back to the initial question, though, which is that strategy. Why do you have to bring everyone back in and change all the strategy up? Take Citigroup, for example. You have Goldman Sachs and Citigroup being the two kind of big stories of the day. Both are around strategy. Goldman trying to clean up that consumer business before this year ends, hopefully before they have to post too many ugly marks in the end of the third quarter. And same goes for Citigroup. Listen, for Citigroup, you have some of their main institutional businesses. Trading, yes, it's been sluggish, but it's held up. Services has really done well, but banking, for the first time in a very long time, you're watching Citigroup slip to be what it stands as today is number 7 on the M&A league tables. Usually they are 4 or 5, right by Bank of America.
We stopped looking after 5, I'm just going to say.
It's true, and UBS, the thing about it is if you think about just how much share the top 3 have, it's typically above 20% of the market share per bank. So currently, JP Morgan has 25% share, Goldman 25% share nearly. And then by the time you get down to Citigroup, it is less than 9% of the global M&A market.
I want to go to what you said about Goldman and bring in Sri, because Sri, you wrote the piece about what's going on at Goldman, the company to undo another Solomon deal, chasing the mass market. It's, we think back to 2019, United Capital. It was a registered investment. It is a registered investment advisor that the company bought for what, $750 million?
That's right, a $750 million deal. And it was also important because right after this group of investment bankers with David Solomon taking over as CEO, this was the first big deal under him. This $750 million deal was part of the bank's push into the mass market, into the mass affluent market. Yes, we've talked a lot about...
What is mass affluent?
So we've talked a lot about their consumer push and like going after the retail market, right? But what Goldman's also really good at in its wealth management business is catering to the ultra high net worth individuals, client accounts that start at 25, 30, 40 million.
That's not mass affluence.
That is UHNW. That
right.
is at this moment certainly not mass affluent. Maybe in the Tim Stenovec zip code, but not in the broader zip code.
All right, let's do this.
Mass affluent,
Sounds
however,
good.
is more sort of in
He was chauffeured to
think
work,
of a
I'm just
client
saying.
with who has $1 million or $2 million account, somewhere in that range, and that's what United Capital bought. They had some 25,000 clients, a group of registered investment advisors, 230, 240 RIAs, who brought to Goldman these $23 billion in assets as it made its push into the mass market. As we've talked about the big unwinding of Marcus at the same time, even in their wealth management business, now we're talking about undoing this deal. And that's a bit of a black eye for the CEO, because we've already talked about GreenSky, the acquisition that the company made just last year. 12 months after completing that acquisition, that company's on the block. GreenSky is something they want to sell, and it'll be sold at a discount. We don't know the price at which United Capital will be sold. It perhaps will not be as bad of a flop as what we're likely expecting with GreenSky, yet it's undoing two of the signature deals under CEO Solomon at a time when he's facing heightened internal tumult.
I'm confused because I feel like every time so many of our market guests are wealth managers. I thought this was the growth business.
To the point that Shree's making, it's the difference between affluent and mass affluent, or ultra high net worth. Goldman is known to have banked the richest of the rich, and what had happened was, you look at Morgan Stanley, for example, where they made a similar but different acquisition. They bought this thing called Solium, which sounds like very boring. It is stock plan administration, but the idea was similar. What Morgan Stanley and Goldman were saying was, we work with Fortune 500 companies across the globe. What we should be doing is sitting there and capturing our relationships in these companies and trying to work more with these executives as they're rising, because we can give them loans, we can help them buy a house, we can manage their money for them, we can, if they go off and start another business, we'd follow them too. So that was the initial idea. The problem for Goldman is they are not so retail. They are not easily moving away from the very, very, very wealthy and gaining scale at kind of that middle range of wealth that Morgan Stanley has been capturing a lot of share at.
But wasn't this entry supposed to do just that? So is it a case of they bought something then didn't manage it well, or what?
Well, integration is not always easy. It's always a challenge. And when they purchased United Capital, we've heard from their asset management executives and wealth management executives that it took up a lot of resources. Mm-hmm. You can never underestimate the challenges of bringing in an organ from outside and trying to make sure it fits in perfectly with the body. There is always a high risk of organ rejection, especially at a place like Goldman Sachs. And that is some of what seems to have happened with United Capital. And I think it is also telling that a leopard doesn't change its spots. 5 years ago, you would have said Goldman, very good in trading, very good in investment banking, and has done a very decent job with asset and wealth management. Do more of that, do that better. That's what investors want. All these adventures that they've tried outside of that have not worked out. And that is part of the criticism that the current management team has faced.
Okay, before we go, Sonali, you mentioned Citigroup's story. Jane Fraser weighing an executive reshuffle following Ibarra exit. What's going on there?
Yeah, remember, Paco Ibarra has been there for about 36 years. And so with him leaving, it leaves a big hole. What ends up happening is you have potentially the trading head, Andy Morton, being kind of risen a little bit to this group. You also have Gonzalo Luchetti, who's the U.S. personal banking head, Shahmir Khalik, who runs Treasury and Trade Solutions. That's that services business that I've been telling you has been doing much better, kind of reaching goals faster than some of the other businesses. But remember what this does, it essentially removes somebody that stood between Paco and those rest of those businesses and Jane Fraser. It gives those business heads more leadership, but it gives Jane Fraser a significant view into these businesses. Remember, Citigroup's stock is down almost 40% since she took over, even with some very tough decisions. So part two now has to be executing and making sure that they're gaining share in the businesses that those fellows are responsible for.
All right, so that makes sense. Lots of details in these stories, and so I highly recommend everybody check them out too at Bloomberg.com or on the Bloomberg. Sonali Basak, Wall Street reporter at Bloomberg News, Sri Natarajan, senior finance reporter at Bloomberg News, both in studio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
In the meantime, this is just our life.
Yeah.
Right?
Yeah, I mean, another day, another bout of extreme weather and incredibly distressing headlines, this time in California, where the remnants of Tropical Storm Hillary pummeled the state with flooding rains today, disrupting flights, knocking out power across parts of the state. Carol, Hillary, get this, could bring a year's worth of rain to parts of a region famous for its usually balmy weather.
I've been talking to a good friend of mine.
A year's worth of rain.
Have you been talking to family out in California?
My parents on the Central Coast didn't get hit, but just south of them did.
My friend in LA, like a lot of water there. And, keep in mind that the U.S. on track to experience its worst year for smoke exposure in decades after wildfires in Canada sent those toxic plumes drifting across the border to the Midwest and East Coast earlier this summer. And then, of course, there's Maui. Hawaii's governor, Josh Green, saying over the weekend that more than 1,000 people are still missing in the wake of the fire earlier this month. Folks, welcome to our reality.
Yeah, they're huge tragedies. But one of our next guests writes that we shouldn't discount the economic damage caused by higher temperatures. Claudia Sahm, the founder of Sahm Consulting and a former Federal Reserve economist, she's the creator of the Sahm rule. It's a recession indicator. She also writes for Bloomberg Opinion. Today, she wrote about how heat drags on economic productivity. She joins us now on Zoom from Washington, D.C. And also joining us is Mark Gongloff. He's an editor and columnist for Bloomberg Opinion, where he writes about climate change. He joins us on Zoom from New York this afternoon. Claudia, I want to start with you. Talk to us a little bit about the economic calculation that goes into this, with the caveat, of course, that first and foremost, oftentimes these natural disasters just lead to terrible human tragedy.
Right. No, there's a human tragedy. Absolutely. Thinking about the economic costs, it really brings it to all of us, right? And the way in which high heat, rising temperatures, one channel, an important channel to affect the U.S. economy, is through reductions in labor productivity. I mean, it's a lot hard when it's high heat. It's a lot harder to do the work, and we have almost 20% of occupations in the United States have heat exposure. It's not just agricultural workers; it's also utilities, construction workers. So there's a wide group of people that are affected by the high heat, and it shows up in the economy.
Yeah, it's, as we talk about the costs, and first and foremost, the loss of human life and the devastation, obviously front and center. But yeah, we have to start looking at this increasingly. We talk about it a lot. I feel like have for years and years. But man, I feel like we're paying the piper now. We're really getting some real numbers in terms of all this costs. I want to go to you, Mark, because as every day there is new stuff that is related to our climate, volatile weather patterns, and so on. When you hear Claudia speak, this is just going to continue, correct? Because at this point, we can't really slow the train, if you will.
Well, we could slow the train, but only by making some drastic choices, by making some different choices about how we produce energy. And her great column today reminded me, and it's one piece of a thing that I've kind of been going on about for a while now, which is, we talk a lot about the costs of the clean energy transition. It costs a lot of money to upgrade our infrastructure, to put in charging stations, to build out solar and wind, although it's much cheaper than building a coal plant. But still, people complain about the costs, and the costs will be high. But to me, I think we need to think of them as investments, because the costs of not doing that are so great. And I think, Claudia, I was just doing some very rough math. Claudia is the economist, I am not. But, if by 2050 we could be losing $300 billion a year from heat-related productivity losses alone in the U.S. economy, and then you get into other economies and then all the other effects that we're seeing. And again, you just ran through the gamut of all the climate disasters we're seeing in the past couple of months. Those are all extremely costly, and they lead to long-term health costs too, and that we haven't even begun to really tally up. And so the costs of not doing anything are much greater than the cost of doing something about this.
Well, Claudia, talk a little bit about that, because perhaps the idea that when we talk about costs, we don't associate what Mark is talking about, right? We don't dissociate the costs that you write about. When people talk about costs, they think about how much it costs to actually do things rather than, subtractive costs, right? How much these disasters remove and take away from productivity. From a behavioral perspective, how do we shift the conversation to actually do this in a way that's, really productive?
It's hard. I mean, and one of the things I talk about in the piece is the human costs, the economic costs. They often are most for lower income workers, communities that have, their housing isn't such that it makes it comfortable when the temperature is high. And so you have to recognize, we have a problem now, right? You can disagree about how much happens in the future with climate change, impacts, how much we can adapt. And yet right now we are losing productivity because we're not dealing with these high temperatures. And frankly, there are very few attempts to even try to locally mitigate some of the effects on workers. And we're not even doing a good job at that.
So what makes us, what's the turning point, I guess? Like, I'm going to be really obnoxious, but is it when the gardener doesn't show up because it's so hot and they can't work in this? What is it that makes, Mark, people maybe pay more attention? We've had conversations, we've started to have more conversations with you about this. Climate change, the volatility, not a new thing, but I keep wondering, I always thought, okay, wait, if you can make money off of this, ultimately people will sit up and take notice. What is it that ultimately makes people think more about the impact, the financial impact, and do the right thing?
I think they are starting to
human impact.
Yeah, well, the human impact is one thing, and there was a study out today that suggested that people are more likely to take action when they're angry. So that's one thing. Maybe seeing people, maybe having your home destroyed and seeing people you love fall ill to this stuff will make you angry. But in terms of what we can do right now, there are things we can do right now to protect workers, and we are starting to talk about this more because we are seeing workers dying from extreme heat. And OSHA was supposed to. President Biden told OSHA 2 years ago to set some federal safety standards for workers, and they still haven't done it. And they're getting another push right now because this summer has been so extreme. And so we are starting to think about it. We are starting to talk about it. Unfortunately, though, it is a case where we seem to need to be smacked in the face with it. To be somewhat optimistic, I think just this one disaster after another that we're seeing that will be costly. I mean, we're seeing more billion-dollar disasters coming than ever before. FEMA is about to run out of money, and we're not even in the height of hurricane season yet, which is a scary thing. It's got enough money to cover Maui, but what will it? Then it's going to have to spend a bunch more money to cover the flooding in California, and then we still haven't even started hurricane season really yet. We could hope for a break there. We could hope for an end to these disasters, but we've had 3 or 4 months of them steadily, and those are the kind of things that might really start to get attention when the money's run out and disasters are piling up. Right.
Well, we hope we can continue this conversation with you both because really smart voices and perspectives on this. Mark Gongloff, editor of Bloomberg Opinion on Zoom in New York City. Claudia Sahm, founder of Sahm Consulting, Bloomberg Opinion columnist on Zoom from D.C. It reminds me, there's a story on the Bloomberg. Bond investors can't rely on credit ratings to give them a fair assessment of the climate risk they're exposed to and should brace for trouble ahead. That's according to the Institute for Energy Economics and Financial Analysis. So it's real, folks. All right, you are listening and watching Bloomberg Businessweek on Bloomberg Radio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We want to talk about ARM Holding or ARM Limited because we are kind of glued to our Bloomberg terminal right now because we are anticipating some news on an IPO that might be the signal that actually the IPO market in a big way is coming back, or fingers crossed that it might be.
Yeah, fingers crossed. ARM is aiming to raise as much as $8 billion to $10 billion in an IPO that could come in September. That would value the company between $60 and $70 billion. That's according to our reporting here at Bloomberg News. Well, it won't approach Alibaba's record $25 billion share sale back in 2014, Carol. It's still expected to rank among the top 5 tech IPOs of all time. And, like you said, to stir the slumbering market for new listings.
Wake up, everybody. All right, so let's get more on the expected listing and the IPO, because there's some interesting nuances. With us is Bloomberg News managing editor of the deals team, Liana Breaker. She is here in our Bloomberg Interactive Broker studio. So we're waiting, could get it today. Talk to us about it and what's interesting about it.
Sure. So we've already uncovered a lot of the details that are going to be in this filing. We reported on ARM's financials last week, so there's not going to be a huge amount of surprises. We know there's 28 banks involved, and what we're really looking for
Not
is...
surprised considering the size of this?
Exactly. Facebook back in 2012 had, I think, around 30 banks. It's not unheard of to have so many banks. They need to syndicate out the shares to all their clients, and they want to have good support for it. So this could hit any minute. This S1, or it's going to be an F1 filing because ARM is a foreign company. They're based in London. But if it doesn't hit by a certain hour tonight, these filings no longer update with the SEC, so we would be looking at tomorrow, but we're still holding out hope it'll come today. And we're hoping for it to be chock full of details about ARM's partnerships. We're going to be looking for what strategic investors could be involved. It's been reported that Intel, Amazon, Nvidia, these could all be companies participating in the IPO.
Which would be also companies that are their biggest clients, right?
Their biggest customers, and
excuse me.
Nvidia tried to buy the company, and the deal was scuttled last year by regulators, so they're looking to be involved. These companies will just buy maybe 100 million of common stock. It's not huge, but it's exciting to have those sorts of names in your IPO to support it.
Can you talk a little bit about, and we're getting some breaking news here now that SoftBank ARM Holdings does file for an IPO.
We were the lucky charm. We've been waiting
You
for
are the lucky
days.
charm, Liana. So that's
Can't
fantastic.
tell you what it will say, though.
And you know, so we should know sometimes in situations like this, the people we have on, like you, have to go. So please don't. But if you do, you do. I'm going to talk a little bit while you do some reading, Carol. Liana, I'm wondering about what specifically you can tell us about what ARM does, because and how it differentiates itself from other chip makers. Because when you say chip maker out there, it's like this broad umbrella term.
It's actually not a chip maker. It's a chip designer. So they are putting together the architecture that's used particularly in mobile phones. ARM is almost in every mobile phone, and that's really where they're ubiquitous. But they've been trying to diversify beyond mobile into data center servers. Those are more lucrative, and that's a real focus for the CEO, Rene Haas. But it is a little bit in the weeds, but they help design these chipsets that are really in demand.
And the important thing here is ubiquitous and like in every phone and, in high demand.
For sure. But the question is, if you're already in every phone, how do you grow? So they're looking into other areas. And I think it's been reported, or they've said they've experimented with, I think, making their own chips. So that's something we're looking at, although that's more a fledgling area for them.
Let's go through some of the headlines. So they are filing for their IPO to be led by Barclays, Goldman, JP Morgan, Mizuho. They are to be listed on the NASDAQ under ARM, nice ticker. They're also giving some financial filings, or I guess maybe some updates, or maybe some of what they've already done. They're talking about fiscal year total revenue of $2.68 billion versus, I guess, what the street was looking for, $2.7. They do not currently intend to pay dividends, but I'm looking for what the size of the offering is.
You won't find that in there. We're actually only going to know that the night before, so that's going to be sometime in September. So there are a lot of blanks in this filing. We don't know how much they're going to raise, what the valuation is, and there's no way to calculate it now. We could just estimate.
So this is kind of what we expected to get, kind of the basic nuts and bolts.
I haven't had a chance to go through it, but I was not expecting to have a valuation or an amount they're going to raise, because they're only going to actually hit the road after Labor Day. They haven't set a price range. This is just the initial step that they're taking.
So it's an old-fashioned roadshow, though.
For sure. And they have been doing test the water meetings with investors for the past few months. So they have been interacting with investors. But at the roadshow, that's when they're going to get a sense of what price this should be set.
Okay, but before we talk about how this could kickstart the IPO market and how Carol continues to go through some of these numbers,
about 90
Liana.
plus pages.
All right.
That's not bad.
You have 4 minutes.
Go.
Sometimes they're like 300 pages. So
I want to hear about
one.
SoftBank's relationship with ARM and what it intends to do in terms of float and how much of ARM it's going to hold on to, and why this comes at kind of a crucial moment for SoftBank and its Vision Fund.
SoftBank's been all over the news the past few years for some of their failed startup bets. WeWork, and they aggressively invest in all these companies and may have lost $30 billion. But they bought this company in 2016 for $32 billion, ARM, and now they could be, doubling their money, and they own 100% of it. The Vision Fund held a stake that they're buying. So this could be a huge home run for them should the company get a valuation that's significant. But the way that, NVIDIA is trading, for example, they would love to see a comparison to that. This could be a big win for them.
We talked about some of their big important customers getting maybe, as you said, $100 million stakes and so on and so forth. That kind of stuff, are we going to find out later? Would it be in this? I'm doing some searches and not finding anything.
The last we've reported was that lineup hasn't been set yet.
I'm doing searches and I'm not seeing anything come up in here.
It's probably going to be closer to when it actually lists because they have to make sure there's enough stock. We've reported there could be up to 10 strategics. So I think they still need to figure that out. And this is also the first time the market is seeing these financials, even though we've reported on some of it. So it all has to be digested before investors, including these strategic investors, decide to, put their money where their mouth is.
As somebody who, on the deals team, and it's been kind of a quiet year, right? How are you thinking about this particular IPO? Is it something in a league all of its own, or does it say something about maybe the bankers will get, start to see some things kind of loosen up here?
We've been hearing all year that after Labor Day, that's where you have to see this IPO window potentially open, and there are companies waiting in the wings. We've reported Instacart is going to have a similar filing like this any day now as well, and they could try to go public in September. There's a company called Klaviyo in Boston, which is a tech company that's also could do an IPO, and there's a whole host of names. It's not going to be a blockbuster IPO market, but it's definitely going to be a good sign to see some green shoots.
Do we know anything about Instacart's finances? Or profitability?
I saw
if there is
a competitor reported on that over the weekend. We haven't verified some of those numbers, but I think it's a different financial picture than this mature semiconductor company.
That's Liana, that's exactly what I'm getting at here is okay, well, maybe the IPO market is strong for, a profitable company that has several $1 billion in revenue a year that has a proven track record versus something that, doesn't necessarily have a proven business model.
I think the verdict is still out on Instacart, although they have been trying for years to hit the public market, so maybe this is their time.
When you go back to your desk and you look through this filing, what is the number one thing you're looking for?
I want to find some nuggets around Softbank, Massar, the Vision Fund, all of that fun stuff, because just last week, the Vision Fund sold 25% of their holdings, or they own 25% of ARM to Softbank, and they sold it at a $64 billion valuation. So I'd love to get some details as a true M&A person, just more on that transaction and what it means.
It's an interesting trajectory. I'm just looking at the history that they say in the filing. Back in 1990, ARM was established as a joint venture, who knew, between Acorn Computers, Apple Computer, and VLSI Technology. So it's interesting, right? Kind of the origins of it and kind of where it's become.
Some of these companies like Apple, it really is just a big, it's just part of all of the tech ecosystem.
Yeah, no doubt about it. All right, thanks so much, Liana Baker. Certainly a busy day for her and her team.
This is Bloomberg Businessweek, inside from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
All right, you are in for a treat. First of all, let's set the stage. Every Republican running for president has to do one thing to have a shot at winning: break Donald Trump's grip on the party's voters. And yet only one seems to really be trying at this, and that is the former governor of my home state, New Jersey, Governor Chris Christie, of course, former New Jersey governor.
Here's what he's said about the former president. Chris Christie has said that Trump is selfish and disgraceful, a serially bankrupted con man who doesn't care about you, fleeces small donors to pay his legal bills, and knows full well he lost the 2020 election to Joe Biden.
Wasn't he once buddies with him?
Well, yet herein lies the rub for Chris Christie, Carol. Long before he devoted himself to stopping Trump, Christie was the man who anointed him, becoming the first Republican candidate to drop out and endorse him back in 2016. Listen to what he said back then. He said that no one was, quote, better prepared to provide America with the strong leadership that it needs.
Politics provides or creates strange bedfellows, and they change from day to day, it feels like. All right, so writing about all of this, and Chris Christie specifically in Bloomberg Businessweek, is the magazine's national correspondent, Josh Green. This story, by the way, in the upcoming new issue of Businessweek Magazine, which is available now on the Bloomberg and at Bloomberg.com/Businessweek. Check it out on newsstands later this week. Josh, great to have you here with us. First of all, it is really fascinating. Chris Christie, friend with Trump, anointed Trump, helped him get to the White House, and now he's just like one of the sharpest critics. Tell us how you wanted to approach this story, and tell us about, I'm assuming, your conversations that you had with Chris Christie.
Yeah, I mean, to me, looking ahead at the race, Trump has had a huge lead the entire time. DeSantis looked like he might be a challenger for a while, but he's kind of fallen back. But what's happening on Wednesday is that a new phase of the GOP primary is going to begin with the first debate in Milwaukee. And as I was looking at the race and looking at the field, one guy stood out, and that was Chris Christie, because Christie is a famously aggressive debater, very effective. He's a big, larger-than-life character. And this cycle, he's the only Republican character who's really going after Donald Trump with both barrels. So it looked like that this could be a kind of inflection point in the race, one that kind of lent itself to Christie's talents. And so I went and traveled with him around South Carolina, New Hampshire, talked to him about what his plan had been and how he had gone from being an important Trump endorser in 2016 to today running against him as Trump's loudest critic.
First of all, I just want to say that the cage match we really want to see, it's not Mark Zuckerberg and Elon Musk. It's really what we want to see is Chris Christie and Donald Trump up on the stage together, because that would be fun to watch. Beyond that...
You're not going to see it, Carol. I'm sorry to tell you.
You never know. You never know. Tell us about your time spent with Chris Christie and what you kind of took away from that. And I am curious about how you maybe challenged him about, wait a minute, you were his friend, now you're his critic. Are you going to go back to being his friend? Talk to us about that.
Yeah, I mean, it was fascinating from kind of an anthropological standpoint, because I went down to South Carolina with Christie. Trump is very popular with Republicans still. And so I was expecting a lot of kind of Trump MAGA people to be in there shouting down Christie and all sorts of confrontation. And instead, what I found was just the opposite. It was almost like a group therapy session of, Republicans, some of whom driven for hours and even from other states, to kind of come and commune with Christie and kind of find a crowd of people who were Republicans but didn't like Donald Trump. There's sort of fewer and fewer in numbers these days. And all of them were sort of worshipful of Chris Christie. So it's really interesting to see that for all that we see on the news and on social media about how popular Trump continues to be, despite indictments, despite impeachments, there still is a group of Republicans who are never Trumpers and who are hoping that Trump won't be the nominee in 2024. I think the problem for Christie and the challenge for Christie is that there aren't enough of them to win him the nomination.
That's what I was just going to ask you.
To have a broader appeal.
Yeah, I was just going to ask you if there are enough of those to actually help him get a nomination. I mean, in an alternate universe, certainly, that could work. So, Josh, what about Chris Christie today? Who is he, and sort of how did he recover from what happened at the end of his term with the old, time for some traffic problems in Fort Lee thing?
Exactly. Well, I mean, look, let's remember, Christie at one point was the rising star of the Republican Party before Donald Trump came along, popular blue state governor, could have run for president against Obama in 2012, chose to wait, and then wound up in trouble with the George Washington Bridge scandal that tarnished the end of his presidency. But he jumped in anyway in 2016 and looked like a viable candidate until Trump came along and kind of stole his shtick as the kind of the confrontational, outer borough, poke a finger in your chest guy. He just did it better. And so when Christie recognized that he wasn't going to be the nominee, he made a move to become Trump's VP and became the first guy to endorse him. And so that shocked a lot of people, because at the time,
it's like, can I just say, it's like watching The Bachelorette, and it's that Bachelorette that just doesn't have a chance, but just going for the rose. It was painful to watch. Sorry.
And instead, it went to Mike Pence, and he wound up kind of getting humiliated. He got fired from Trump's transition. And I think his reputation was really kind of in tatters. As the Trump administration went off the rails, a lot of people, Republicans and Democrats, I think scorned Christie for having enabled Trump. And so one of the things that I think is going on, and I get at this in the piece, and I talked to Christie about it, is he really running for the Republican nomination? Does he really think he can beat Trump? Or is he really aiming here for personal redemption? Because if he does manage to stop Trump, even if he himself is not the nominee, I think a lot of people will be very thankful, and that he'll, in a sense, redeem himself in a tone for how he helped Donald Trump 7 years ago.
Well, don't you feel like, Josh, and that's where I put a note as I read through your story, his impact if he doesn't get the nomination, and you get to it. Is it just the point that this is someone who actually is standing up and kind of poking the bear and saying, wait a minute, you did this, you did that, is this what we want for a president? So, is that how he redeems himself ultimately? And then is that going to be useful politically? Will it change the minds of voters?
Well, I think what he's trying to do there is essentially bait Trump into attacking him. Like, the challenge for all of these candidates is they need to emerge as the main anti-Trump alternative. For a while, it looked like that was going to be Ron DeSantis, but DeSantis is now in a tailspin. So if Christie, his hope was to get on a debate stage with Trump and kind of go mano a mano and beat him up and hope that Republicans recognize that, hey, there's a new sheriff in town. Christie is also this tough guy. Maybe we should switch our allegiance to him. Well, he doesn't have that option now, but there's still going to be a scrum on Wednesday night at the debate, and Chris Christie can still stand out from the rest of the pack by going after Trump. I think the question is, will Republican voters follow him there? And the early polling evidence is that they won't. And I sat down with Christie and asked him about that, and he said essentially, listen, I know none of you guys in the media and none of the pollsters believe that I'm going to beat Trump. But when I do, when I go out there and beat him up in the debates, and his own voters see that, they're going to think to themselves, and this is a quote from Chris Christie to me, okay, he did that to Trump. What in God's name will he do to Joe Biden? And at that point, Christie is hoping that they'll switch their allegiance. Mm-hmm. That is the theory. We don't have a lot of evidence yet to suggest that it's going to pan out that way. But I would point out that there's a new Republican poll out of New Hampshire voters today, and sure enough, Chris Christie has leapfrogged Ron DeSantis and now stands in second place behind Donald Trump.
Wow.
So still within the realm of possibility. A lot of it is going to depend on how Christie does in the debate.
So it could happen, but let's say it doesn't happen, and let's say that former President Trump is, once again, for a third time, Republican nominee Trump. What happens to Chris Christie then? Does he do what so many other never-Trumpers did and gather around and say, well, I guess he is the Republican nominee and we'd rather see him as president than Joe Biden?
It's a great question, and it's one that Christie ducks by saying he doesn't think that that's going to happen. But it's really tough to go from being anti-Trump to pro-Trump to anti-Trump to back to pro-Trump. At some point, you have to put on a neck brace from all that whiplash. I think what Christie is really hoping for, that no matter how things turned out, that he's redeemed himself in the eyes of the political world to an extent, simply by fighting the good fight that the other Republican candidates don't seem to be willing to, and trying to stop Donald Trump. Now, that might not get him an important political job, but look, hey, maybe in 4 years, if the Trump era passes, maybe if the party sours on Trump and nominates somebody else, a Ron DeSantis, a Tim Scott, Christie will come to look like a brave guy, like a prophet, and maybe find a role for himself in politics as perhaps an attorney general, or maybe 4 years from now, 8 years ago. He's only 60 years old, which is like adolescence in national politics. He could theoretically run for president in a future cycle where the MAGA vote isn't as powerful and still have a chance. So I think the main thing.
What is this world you describe, Josh?
Well, it's on a far off on a distant planet.
Okay.
But, people have been predicting for years and years that eventually Trump's hold on the Republican Party would break. But look, if he loses the election in 2024 to Joe Biden, I think that's going to go a long way towards severing the party's connection to Trump. And if he wins, he can only serve one term. So there is a light at the end of the tunnel for non-Trump Republicans, just in the sense that, eventually Trump can't be the president anymore, and somebody else is going to kind of get that role. So I think Christie is also acting with an eye toward what that future might look like. But, of course, he's banking on the fact that we'll have to look very, very different than a Republican president does today.
Josh, I find it so fascinating that here we are, another presidential election coming up, and the focus is once again about Donald Trump and just different angles, whether it's his legal woes or, candidates trying to go after him and his woes or what have you, rather than some of the really important issues. I mean, Tim and I kicked off our broadcast, freaked out again about the volatile weather and climate change and the things that are impacting. And we're still talking a little bit about, obviously the worries about inflation and so on and so forth. So it's just interesting that, again, like strategy is just focused around beating Donald Trump and not necessarily talking about really important strategies.
It seems weird until you go out to a Republican event and talk to voters, and it's just the only thing. I mean, it's hard to wrap your mind around how fully focused the political world, and especially the political world, continues to be on Donald Trump. That's just, it's as if he's waved a magic wand and somehow hypnotized everybody into only thinking and caring about him, about what he does, and about how people react to him. So I think in that sense, Christie is not off base in going after Trump and trying to distinguish himself that way. The trouble that he has, though, is that a lot of Republicans still have very positive feelings toward Donald Trump, and going out and attacking a guy they like, doesn't really get you that far in the polls when he's the guy that you're trying to supplant. So Christie's hope is that he can beat up Trump, or that Trump will somehow stumble, and when he does, voters will be looking around for an alternative. But Republican candidates have been telling themselves that literally since 2015, and it hasn't worked yet. So a lot of things will have to go right for Chris Christie to wind up as the nominee.
Just got about 40 seconds. Your book, Devil's Bargain, Steve Bannon, Donald Trump, and the storming of the presidency. When you track that 2016 campaign from the very beginning, how are you thinking about that book and kind of where we are today, continuing to talk about Trump? And forgive me, only about 30 seconds here, Josh.
Well, I think the story of that book was the rise of Trump in this brand of nationalist right-wing politics that nobody believed in and nobody saw coming. The way I think about it now is that person and that brand of politics have now overtaken the Republican Party, and it's not clear that there's room for anybody else. But if there is, it's going to be a candidate like Chris Christie who manages to tear down Donald Trump and offer an alternative that enough Republicans find appealing. Not sure that that's going to happen, but if you squint and look closely, there are some inklings that it might be.
All right. Well, we always love our time with you. And that book, by the way, was a New York Times bestseller. Josh Green, national correspondent, Bloomberg Businessweek. This story in the upcoming new issue already on Bloomberg and online.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. And you are listening and watching, of course, Bloomberg Businessweek on YouTube, on Bloomberg Originals, and, of course, on, who did I miss? Bloomberg Radio?
Bloomberg Originals, Bloomberg YouTube. Did you do YouTube? That newfangled internet video thing?
What is that?
Yeah, it's this new thing on the internet.
Not just
and then,
videos.
of course, we're on the Bloomberg Terminal and Bloomberg Radio. We're on SiriusXM Channel 119. You can find us a lot of places,
We
Carol.
kind of are the metaverse.
Yeah.
No, not really.
Put those goggles on.
Put those goggles on, or rose-colored glasses, and yay, everything's awesome. You got stocks, as you just heard from our team, definitely off their lows of the session. We got a rally in the tech sector, 1.7% higher on the NASDAQ 100. This is Treasury yields hit the highest since 2007 on those elevated rate, fears. So put your head around that, everybody.
I can't put my head around it, and hopefully we'll get some more explanation this week and a little later in our program as well. I'm looking forward to what we hear from Jay Powell and company over at Jackson Hole. Mike McKee's headed there tomorrow, international economics and policy correspondent. The surveillance team is going to be there as well. Is there going to be news?
I don't care. I care about NVIDIA. I want to
Why?
know because they report earnings on Wednesday. This is a stock that's up 220%. So I always think about everybody's like poo-poo, the tech names, like stop. They get, so much of the gains is focused on so many names. But if that is where the growth is ultimately. And look at something like an NVIDIA that feels like it just came out of nowhere. We're talking about the ARM IPO. They wanted to buy ARM.
I was just going to say that.
So it's just like this has been kind of the it girl, if you will, of the market right now. And we will see, last time around, it really surprised us that it grew into the expectations that were there from investors. Do they continue to do that? That's
or
what
are
I want to know.
expectations too high?
Or, yeah, I mean, you're looking at a PE of 227, a forward-looking PE of 57, a little bit more rational, if you will. But every day it feels like more of the analyst community comes out and ups its price target on this names. This is a stock that continues to just, I feel like be the future of where we see growth. And maybe this is a market that we continually see these new entrants that, okay, that's the future.
I'm also thinking a lot about what we heard
Not
last
very
week
eloquent,
from the big.
sorry.
That's okay. I'm here. I'm thinking a lot about what we heard from the big retailers last week, Carol.
Yeah.
Target's CFO, Walmart's CEO, the fact that consumers are stretched and that when student loan payments start up again in a couple of months, they're concerned that discretionary purchases will go down.
But does that mean a name like NVIDIA?
No, not necessarily. But it's sort of this tale of two different types of companies out here right now.
Yeah,
you have the Nikes on one side, the Targets, the Walmarts on one side, and then the high-flying tech on the other.
No, I think that's a really good point. So I feel like this is an interesting backdrop for our market guest, our Drive to the Close guest. So let's bring her in. Megan Horneman back with us, Chief Investment Officer at Verdence Capital Advisors on Zoom from Hunt Valley, Maryland. So Megan, nice to have you back with us. What's top of mind for you when you look at the move that we've seen in U.S. Treasury yields, but really global yields, especially for developed markets? But we've also got stocks bouncing up again after, 3 weeks or so of declines.
I don't think today's market action in the equity market is anything to really read too much into. I think it's a little bit of a kind of dead cat bounce, as you say, as we've been 3 weeks now with weak equity markets. And then there's a lot of optimism about earnings this week that are coming out. I think it's just getting a little ahead of itself. Might be some short covering in here as well. We still think from a fundamental basis, we have an issue in the interest rate market. And when we typically see rises like this, you're talking about 100 basis points in just the past few months. This has usually led to exposed areas of weakness in other areas of the economy. We don't think that, I think this also has a little bit to do with investors becoming realistic on what the Fed can and can't do. So you're seeing that at the backup in interest rates, but I still think it's a big risk. It's a big risk to the equity market. It's going to be a challenge in the second half of this year.
Okay, lots of different directions we can go in right now, Megan. I want to just stop on what you think what investors think the Fed can and can't do. Be more specific there, please. What can the Fed do and what can't it do?
So before, the majority of this year, the market was rallying on the expectation that the Fed was done and that interest rate cuts, at one point, they were priced in as early as June of this year. I think what you're seeing now is an unwinding of that because we are still dealing with, we've come very far with inflation. It's come down substantially from where it was, even a few months ago, but there still is a long way for the Fed to go to say that their job is done there. So we think that realism that they're not going to cut rates. Interest rate cuts are not anywhere on this horizon. They don't have the ability to do that. In fact, there's a lot of indications that suggest inflation may start to creep back upwards because of what we've seen here in the commodity markets. So this is going to be challenging for the Fed, and we think that investors have to accept higher interest rates for longer and that the Fed can't come in and just cut rates at the first sign of weakness.
So what do you do? We've talked a lot about the appeal of the U.S. Treasury curve, right? You've got a 10-year at 4.3. You've got a 2-year note just below 5% right now. But having said that, you still have inflation out there. But if inflation also means those valuations on the equity side are at risk, help me out and tell me where is the smart money going?
So it's kind of a fine line right now because I do think when you look at, we started to do throughout this year as interest rates started to creep a bit higher, we went from a very, very short duration to our benchmark in our fixed income portfolios to moving more out to a benchmark weight. We think that you should at least be moving some of that duration out a little bit. I wouldn't go crazy and be buying 30-year treasuries or even beyond, a kind of an intermediate long-term index. But when you look at what you expect from an economic standpoint, eventually the Fed will be on pause indefinitely, and we will then start be looking at rate cuts. We're not there yet, So staying in that short end as well in cash and just having that liquidity, that's great. But start moving some of your short duration fixed income that you might have had, start moving that out the curve a little bit. That's what we would do at this time.
What about when it comes to equities, just in the last minute that we have with you?
Yeah, we're not ready to jump into it. We're still neutral, and we're not underweight because even though we don't think the Fed's going to cut rates, we think that they're towards the end in the final innings of this rate tightening cycle. So we don't want to be significantly underweight. We'll be neutral, but we don't want to go overweight until we start to see the market price in the expectation that this economy is not as strong as they think it is.
20 seconds. How much is in cash or cash-like investments? Is it above normal or below?
Oh, it's above normal. We have a significant overweight to our benchmark, depending on the risk tolerance. But yes, significantly higher than that.
How significantly higher?
In some of our more conservative accounts, we could be 10% overweight in cash.
Wow, okay, that tells a lot. Hey, Megan, thanks. Megan Horneman, she's Chief Investment Officer at Verdence Capital Advisors on Zoom from Hunt Valley.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.